Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 6th of May, 2025. And what a day of news it's turning out to be. Let me get to some of it, and then we'll talk more. We're going to get in the morning, not today, morning, the Mortgage Bankers Association. They're going to come out with their indices at 6. Tomorrow at 1 o'clock, we get the FOMC statement, followed at 1:30 by the Federal Reserve Chair, who will hold a press conference. It normally goes about 40 minutes or so, 50 minutes. During it, you're going to get the Federal Reserve releasing the U.S. March consumer credit data. Now, the news that has just broken, I don't know if you were watching today financial TV and you saw the press conference of President Trump and Prime Minister Carney of Canada. But during it, unlike with ex-Premier Trudeau, there was actually joking, and Carney handled it well when the president, again, he just can't resist it. You know, the 51st state, we'd like to buy, he's doing his stuff. And Carney threw it back. Well, not everything's for sale in real estate. President said something, and Carney said, well, do you think the White House is for sale? And it was clever. It was good. And you see the two have a rapport. There's a respect there. I don't know how long it'll last, but there's a respect at this point in time. And he gave Carney a lot of good words. He didn't do that with Trudeau, as you know. So we'll see. Canada also, I have to say this, has opened up foreign markets for themselves. You know, their trade with the U.S. has fallen rather sharply due to the tariffs. Their trade on the Ivory report that just came out went up nearly 26% with foreign countries. So they're opening markets. They're not going to be as reliant as you think on this. But at the end of the day, I predict we all get along and this gets buried. It's just the way that this man happened. I'm talking Trump negotiates. Here's the big news. You heard during the conference, the president's not ready. Everybody comes to us. We're the big firm. And he always the word, I'll decide what we do. Well, he said he's not ready for China. Okay. And then literally an hour later, news breaks, senior U.S. and Chinese representatives are going to meet face-to-face this weekend in Geneva. Guess who? Secretary of the Treasury, Bessent, Jameson Greer, our trade rep, and their senior counters in Geneva. So there's more going on that meets the eye. That's a great thing, all right? This has to all calm down. Everybody needs each other. And I get what the president is doing. I agree with what he's doing. The U.S. needs to take control. It needs to bring trade back where since World War II, we have been the country with all the money that we have, that we just let things keep happening. They put up tariffs, they put up VAT taxes, they do digital taxes. Okay. UK's making big rounds too. They're in Washington right now. They could be the first country to sign a deal. I know a lot of people think India. Speaking of that, are you aware that India today attacked Pakistan? 9 areas that they hit missiles and so on, not military targets, and they said they're doing it with restraint. We will see what happens. It was in retaliation for the people killed in Pakistan. Then the president said that the U.S. has now got a word between countries that Houthis will not attack U.S. ships, and the U.S. won't attack Yemen. Israel's still in play. I don't know about ships that go through the Red Sea towards Israel. We'll find out. You never know enough about this, but let's applaud that. That's a step in the right direction, too. All right, let's go to what we've got in front of us. So, you were down pretty good in the stock market. This news of China and the U.S. has kicked everything higher. That's exactly what this is with. The gold, which was up $100 an ounce on the close, is giving back a fifth of that right now, but silver's holding on to most of those gains. Obviously, any break in the tension between the U.S. and China would be a good thing for energy, and you're seeing that that's gotten a little boost. And I don't think anybody knows what to do with the bonds and notes right here. Here's why I make that statement to you. I make the statement because the Fed is widely expected to sit tight. I am in the camp that no longer believes the Fed is going to be inflation dependent for the next 120 days. I think they're going to be jobs dependent. And if they see that these tariffs are causing unemployment to go up from 4.2 to 4.4, 4.5, I think they'll be able to say they're looking through the inflation, which is tariff related. They don't know how long that will last, but they have to make the jobs work, and they'll go for that mandate. That's my guess, but I want to be on record with that. As we look at the S&P, as I said, the resistance in the market is right here at 57, 59, 60. And you round it to 75, by the way. But that's where I see the resistance on this rally. When we go to a daily chart, you can just see how the market has been moving up. I have been telling you that I thought this area, I've said that to you several times now, is the resistance zone, and you're climbing into that area as we talk. The trend is up. You do have higher lows, higher highs. The market has held back here the 18-day average when it got over it and gave you the bounce, and the resistance is all between here now. 57.86 right on up to the 100-day average and the 200. So all this area is where I see resistance. You have the bullish embedded reading, so no, you don't want to be bearish. As I told you, I think the pros are buying breaks in the market, hoping they can get a rally as long as you keep the embedded reading in play. You have the same reading in play in the NASDAQ. The market is up and over the 18-day average. The bias is up. Unlike the S&P, you have a lower low, higher high. So this trade is what I call a 100% momentum trade. It's based on what this market does. If it rallies, it too. Look at these three areas here, the Bollinger Band, the 100-day average, and the 200. That's your resistance points. That's not the case in the Dow, just the Bollinger Band. That's very far away. I'm not saying it can't go there, but I am saying the immediate in play is the Bollinger Band, and it too has your embedded reading, and the same with the Russell. So for the first time in a very long time, all four markets have bullish embedded readings. If the red lines close under 79, that's a sign that the rally has peaked out and coming down. As long as it stays in place, I look for Bollinger Band potentials to be hit in the market. Take my S&P report that's on our website. I'll talk about it right at the end of this. In the DAX, still rising. Today was down a little bit. As I told you, you've got your bullish embedded reading. This is a momentum trade. Maybe you can get to the upper Bollinger Band. It really doesn't have to. You've gotten up so high with such a long thing that I think a lot of pros have taken some money off the table. I see the trend is up. You're sitting at neutral on the 18-day average. I'm a broken record. You know, if I were lucky to be a Kramer type with his machine that he could hit, I'd be going, it's at the 18-day average. The market's on a support line or a resistance if you're coming up to it. It depends which side, but that would be it. And that's where you're at going into the FOMC meeting. You want to see the report there. It's not quite the same with the 2-year. It is staying under that number. It is oversold, so that number probably becomes something of a short-term resistance temporarily. The dollar is continuing to fight this 18-day average. I pointed out to you just yesterday, I said, look how the arms are wrapping around the Bollinger Bands. That's where you get whipsawed. I still want to say that. The guys that went home short tonight, you're not embedded, I don't know. I would think the dollar gets a bid when it opens tonight. I say that because the euro is down 30 points. That makes up 57%. But look what you're fighting at. I mean, you don't have to be a genius sometimes to look at it, and I'm certainly not one. But you look at the lines, you learn where the resistance support is, and you always pay attention to the 18-day average. It's where markets like to base out. If this drops, the support's 112.79. If it rallies, it's 115.12. The trend is down, but you are oversold and not locking and converting from oversold to locking in a bear trend. In the British pound, higher highs, lower lows, just going flat right here. Then we get to Bitcoin, which is fighting a big battle. Is it going to lose its embedded reading? Well, if you take a look on the close today, the market was at 80.91, but it closed at the day's high. So it had to open steady to higher to get away from that, and that's what the math is doing. If, and that's a big if it can keep its embedded reading, you still have a shot at that 100,000 level that I think I've been talking about for 2 weeks now. In the Brent, you came down to the Bollinger Band, not embedded. What do I teach you? That's where I think the smart money comes out of the market. I realize you're going to tell me it can do this and run there. For the amount of times you see that on this chart, is it worth it? I know you're going to say yes, and that's your style of trading. It's absolutely perfect, in my opinion. I have a different style. And I think that that's where the professional money likes to come out of the market with all the position, unless the market's embedded. When you look at the WTI, getting a bounce from that, same way, identical. Tell me that you just didn't go there and you come right up in the gasoline, kaboom. And when we come with natural gas, now here's the problem that you're going to have in nat gas, and you got to pay attention. If you can keep crude oil, WTI, under $60, you're going to lose a lot of production, especially in the Permian Basin. What's going to happen is you're not going to get people wanting to drill new wells. It's too expensive for the casings. It's too expensive for everything else. And they'll just say, we'll wait. And I think you won't see that production until you're closer to $65 a barrel. So you've got to be careful. You know, you wish for a good thing and you get too good of a thing. If the president of the United States thinks that under $60, U.S. people, I'm talking the drillers, the oil people, are going to go out and really increase U.S. production, boy, is he wrong. I've been reading and reading and reading, and I've been doing this a good part of my life. I'm not an oil man, but I understand that that's the number that they're looking at. 55, 57, they're not doing it. They're definitely not going to do it. They may even trim in production. What will that do for natural gas if we're making a market for this? Well, it'll lose some of the supply that it's getting. That could be interesting. So natural gas, to me, is one of those markets I want to be bullish, not bearish, from a fundamental point of view. The market is getting itself close to overbought. I can see the resistance, but I like the market from all the fundamentals that I'm reading. All right, so that's where I think this market is sitting. Now, as I told you, I have an S&P report. It is up there. It goes off our website tomorrow. I just checked. So you want to give a click here. And when you go to iraepstein.com on the top left, it's there. Another way for you to do it, if you're on a PC, you'll see right up here a circle with an eye in it for information. Give that a click. If you're watching on YouTube, it'll take you down to the area that you need. Otherwise, it's an icon that'll pick you to the website of ours, depending on how you're doing it and where you're watching it from. With that, I'm Ira. I will catch up with you first thing in the morning. Whoa, what an interesting day for news. Take care.